I think the number in itself was pretty much in line with market consensus, although predictions were all over the place, as you say. I think what is really interesting is to break it down a bit, because there's at least two sides to this number, the supply and the demand side. What you can see in the production side figures is that they have come back very quickly, certainly for large industrial enterprises. I'll just drop you a couple of numbers. So month-on-month real seasonally adjusted growth, which is what the MBS provides, basically larger enterprises, in February fell by almost 25% month-on-month. In March, bounced back by 32%. So that in that particular segment, you can see a V-shaped recovery. On the other hand, if you look at the demand side of things, retail sales remained pretty weak. Fell 20% in January, February, and fell 16% in March. Looking at some of the sort of more high-frequency data that we look at, things like traffic and tourism visits, there is signs of continued improvement in April, but it's definitely a picture where production is coming back, but local demand, consumption, is also coming back, but at a slower pace than the supply.
Right. So does that then mean that it will be a manufacturing or an industrial-led recovery rather than a consumer-led recovery in China? And what does the second quarter look like, do you think, based on those March partials that we got? You were talking about some of them, industrial output, for instance, only declining by 1.1% year on year in the month of March.
I think that is broadly true, but looking into the second quarter, the really big risk for China is, as the pandemic spreads across the rest of the world, that exports drop away. I mean, we're already seeing that in terms of reports for new orders for exports in China. And so, the question is for the Chinese government is, with global demand likely to fall off quite sharply, how much they decide to further stoke up domestic demand in order to mitigate that impact. Because obviously if exports just fall out and there's no export orders for all this industrial production, which is starting to ramp up, that's going to cause all sorts of problems for Chinese manufacturers.
And you can certainly understand, therefore, why the Chinese government has for years been trying to rebalance its economy so that it is less dependent on exports and external demand. So, Duncan, what exactly can the government of the PBOC do to really put the fires under domestic demand?
Well, so far what they've done largely is similar to the rest of the world. They've put in place a large amount of funding for enterprises to keep them ticking over. They've started to stoke up some of the consumption side policies, but in a very small manner. So things like cutting the VAT for second-hand car sales, that will encourage existing car owners to upgrade cars. There's been some local level, city level policies, things like cash for clunkers for car sales, or increasing the annual car license plate quota in a couple of cities. I mean, they're pretty small size. There's also been sort of 30, 40 cities putting out these consumption vouchers, so basically local government subsidies for local consumers to spend in shops, tourism, restaurants, that kind of thing. So there have been these kind of efforts, and also in the property market, a lot of local pretty small measures, again, to encourage home sales, and home sales have started to come back. So what we would expect to see is these kind of measures being amped up a bit. The big question is whether these measures remain as they are right now, which is pretty local, small-scale finance on the local budget, or whether the central government, which has a much larger balance sheet, really steps in to boost consumer demand.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.